the whole narrative that we're sort of in the middle of or experiencing this time is that it's all different this time. Since 2022, we've seen debasement in the dollar. We've obviously seen an ascent in gold. So I think from my vantage point, usually what I do, instead of sort of leaning into the narrative of it's this, is it different, is to consider, well, wait a minute, what if it's not all that different? What if the story doesn't play out the way we think? And can we look at the past to see if these signals have been consistent? And what you say, right, we have the dollar going back to 1973. We've certainly seen top decile weakness over the course of the last year, but in a massively strengthening trend over the last, let's call it 10 years. So we haven't really seen sustained weakness. But the interesting part is if you said, okay, let's look past all of that weakness and say, well, what usually happens next? Outside recessions, which is obviously a problem for equities, regardless of the currency backdrop, and sometimes the dollar actually strengthens during recessions, but recessions, the stock market actually goes up 90% of the time.
Over what period of time?
And it's actually inversely related. Over the next 12 months. So after you have seen sustained weakness in the dollar, the market is more likely to go up and down. And the more weakness you have seen, the more likely the market is to go up. So it gives you pause, much like all of the signals that we talk about give you pause, in that maybe it is that the dollar weakness doesn't mean what you think it means. And I think you hit the nail on the head in terms of why, is that more often than not, some of this is a mathematical translation, but some of it is just correlation. It actually correlates to a strong growth environment. Some of that is just the translation back of the growing share of revenues outside the US for our S&P 500 companies. But some of it is just that the currency isn't the main factor of growth. So I think when I look at the data, I think many years ago, 2 years ago, it feels like forever ago, but 2 years ago, everybody wanted to talk about inflation and what that was going to mean, because inflation was the key variable in terms of what we saw in terms of it being market moving. And then it sort of entered this trend of, yes, I mean, we could look at the deviations, but it wasn't the main driver to the market. I feel like that is where currency is right now. It isn't the main driver to the market when you look historically. Why? Because earnings growth is. And we're still getting confirming signals that earnings growth is strong, regardless of the currency.